Ever wonder if those old stock market sayings could actually help you beat the market? Today, we're diving deep into 5 of the most well-known stock market strategies. Strategies that many investors, maybe even you, swear by. But here's the big question. Are they really making you money? Or are they just myths that could actually be holding you back? We're not just guessing here. We've tested each of these strategies using real S&P 500 data from 1980 to 2023. Over 40 years of ups and downs, booms and busts. And trust me, what we found might just surprise you, especially the last strategy, which could completely shift how you approach investing from now on. So whether you're a seasoned investor or someone just getting started, you're going to want to stick around. These results are eye-opening. Before we jump into the myths, if you enjoy learning about smart investing strategies that could give you the edge in the stock market, hit that subscribe button and tap the notification bell. We're constantly breaking down market trends, debunking myths, and sharing actionable tips. Your subscription helps us grow the channel and ensures that you won't miss out on any future videos that might just help you maximize your returns. Let's kick things off with a lesser-known strategy. Buy on Rosh Hashanah, sell on Yom Kippur. The theory behind this one is simple. Buy stocks at the start of the Jewish New Year and sell 10 days later on Yom Kippur. Some investors believe that this short-term strategy gives them a boost in returns. But what does the data say? We tested this over 44 years, and here's what we found. It only worked 21 times out of those 44 years. That's less than half the time. And the total return over the entire period? Minus 3.45%. Yes, you heard that right. Following this strategy would have actually lost you money. Even when we give this strategy the benefit of the doubt and exclude the 2008 financial crisis, when the market dropped nearly 18% during this period, the results are still weak. Now, you might be wondering, why would anyone keep using this strategy if the data doesn't back it up? Well, like many investing myths, it's likely based on a few short-term successes that stuck in people's minds. But, as we've just shown, over the long term, this one simply doesn't hold up. Our verdict? This strategy is busted. You'd be better off sticking to a more consistent approach than trying to time your trades with this holiday-based tactic. Next up is one of the most famous stock market sayings, sell in May and go away. The idea behind this one is that the stock market tends to underperform during the summer months. So the logic goes, it's better to sell your stocks in May and return to the market in the fall, once the summer slump is over. Now, this one is pretty popular, especially among retail investors. But does it actually work? We analyzed the data over 44 years, and here's what we found. Out of those 44 years, the market actually fell during the summer only 16 times. That means nearly 2/3 of the time, the market rose during the summer. And here's the kicker. If you had stayed invested during the summers from 1980 to 2023, your portfolio would have grown by 64%, just from the summer months alone. That's a substantial amount of growth that you would have missed out on if you had sold in May and gone away, like the saying suggests. So, what's the verdict? Staying in the market through the summer would have served you much better than selling and sitting on the sidelines. This myth is officially busted. Selling in May would have caused you to miss out on some key gains. And here's a question for you. Have you ever sold your stocks in May thinking it was the smart move? Or do you prefer to stay invested year-round? Let us know in the comments. I'd love to hear your thoughts. And remember, the final strategy we're going to reveal might completely change how you think about the stock market. Trust me, it's one you won't want to miss. Now, let's talk about the January Barometer. This one claims that the stock market's performance in January sets the tone for the entire year. In other words, if the market rises in January, the rest of the year is likely to be positive. But if January's down, then the rest of the year could be a rough ride. This strategy has been talked about for decades. So, what does the data say? We crunched the numbers, and here's what we found. The January barometer was correct in 30 out of 44 years. That gives it a 68% success rate. For a stock market predictor, getting it right 2/3 of the time is actually quite impressive. But wait, there's more. We decided to test whether you could actually build a winning strategy around the January barometer. Here's the plan. If the market rises in January, you stay invested for the entire year. But if the market falls, you sell your stocks and sit out the rest of the year. Sounds straightforward, right? So, how did it perform? Well, over the 44-year period, this strategy would have earned you a 2,289% return. Not bad at all, but, and this is a big but, if you had just stuck to a simple buy and hold strategy during the same period, your return would have been nearly double that, at 4,410%. Our verdict? Confirmed, but not enough to beat the market. The January barometer is interesting and has some predictive value, but it's not the secret to market-beating returns. Now, let's move on to the Santa Claus rally. This is a fun one. The theory behind the Santa Claus rally is that the stock market tends to rise during the last week of December and the first few trading days of January. It's all about holiday optimism, year-end bonuses, and general good vibes lifting the market. So, does this festive strategy hold up? According to the data, the Santa Claus rally held true in 61% of the years we analyzed. If you had followed this strategy every year from 1980 to 2023, you would have gained a cumulative 70% profit. Now, 70% over 44 years might not sound like a massive return, but for a short-term seasonal strategy, it's actually quite decent. So, is the Santa Claus rally a golden rule of investing? Probably not, but it's definitely not one to ignore entirely. Our verdict? Soft confirmation. It works more than half the time, but don't rely on it as your main investment strategy. Think of it as a bonus rather than a solid plan. Finally, we arrive at the October effect. This myth claims that October is a particularly dangerous month for the stock market. Why? Well, it's all rooted in history. Some of the most infamous market crashes, like the one in 1929 that triggered the Great Depression, happened in October. But does that mean October is cursed? Should we all fear the markets during this spooky month? We decided to find out. Instead of focusing solely on October, we looked at the performance of all 12 months to see if October really stands out as the worst. And guess what? It's not October you should be worried about. It's actually September. That's right. September turned out to be the worst month for stocks over the 44 years we analyzed, with consistently negative returns. October, by comparison, was relatively tame. So we thought, why not test a strategy where you stay invested for 11 months of the year, but completely sit out September? And here's where things get really interesting. If you had invested $1,000 in the S&P 500 in 1980 and held it all the way until 2023, you'd end up with about $44,000. But if you had followed a strategy of skipping September every year, that same $1,000 would have grown to $71,000. That's an extra $27,000, just by avoiding the market in September. Now, of course, this is based on historical data, and past performance doesn't guarantee future results. But it's a massive difference, and it really makes you think about how certain months could impact your long-term returns. Skipping September might seem like a small adjustment, but it clearly could have a big impact on your portfolio. Our verdict? September, not October, is the real culprit, and this strategy, surprisingly, would have worked out in your favor. So, what do you think? Would you consider skipping September in your investment strategy? Let us know in the comments. So, there you have it. If you enjoyed this breakdown and want more deep dives into stock market myths and trends, don't forget to subscribe and check out our next video. We've got plenty more tips and strategies to help you navigate the market. Thanks for watching, and we'll see you in the next one.